It is March 14th, 2020, and here we are in the middle of the great crash slash recession slash pandemic slash crises of 2020. And what I want to do is to really take this opportunity to review what has been done and make plots for our point going forward. Hi, I'm John McNeil. This is the Invest Strong Network. Welcome. When I started the Invest Strong Network back in early January of 2020, my goal was to really educate and give some advice from my many years of investing and wealth building that could perhaps benefit those of the YouTube audience. Right now, the last several days, I've been going back and reviewing all of the vids that I have produced over the last 2.5 months or so. And I must admit, I'm not one to pat myself on the back or toot my own horn, but wow, some of these vids were incredibly prescient, right? Now, this is not because, I have some great insight or am some oracle of any kind. Believe me, that's not the case. What I have done, I have distilled my experiences having dealt with Black Swan events after the September 11th attacks, and also Hurricane Katrina, for example, and also the great financial crises of 2008, 2009. And I've used those as templates for building portfolios that have endured the test of time, right? I encourage everyone watching this video, please go back and read and review my previous vids, right? The vids on Black Swan events, the vids on purchasing penny stocks, the vid on 5 stocks, or I'm sorry, stocks not to buy, right? And when you review these things, you will see that wise selection of investments that will go into one's personal portfolio is critical for success during moments of crisis, right? And we are in right now a moment of crisis that we don't know how long this is going to last, but we do know it's going to be painful and it is going to be deep, right? But with that said, there are opportunities. There are always opportunities. So let's do a bit of a review and let's start plotting for greener days, right? Okay, so one of the first vids I would like for everyone to review are the stocks not to buy, right? Now, that vid is critical because at the time, I had no idea that this COVID-19 thing would sweep our nation and really sweep the world and cause this kind of crisis. But I encourage everyone to avoid low margin businesses and also businesses that are susceptible to massive disruptions. And by name, I mentioned the airlines, right? I mentioned restaurants, full service restaurants, right? I mentioned companies that have been involved in scandal or crises, right? And I mentioned some of the REITs, the retail shopping centers and shopping malls and things like that to avoid. Now, that was actually before the crisis, right? And wow, was that timely, because those particular industries are the very ones that are getting walloped like crazy right now, right? And I get the strong feeling that many of them may not ever come back, right? So review that vid, please. Review the vid on purchasing penny stocks or low price shares. One of the points I made in that particular video was how in the great sell-off of 2008, 2009, That was really the last time that good companies got caught in a downdraft and were their shares were dragged down into the penny stock range. And so, now, right now, maybe a good chance to go back, review that vid, and also start looking at some low price shares of companies that are of good quality, high quality, that have been dragged down, if not in the penny stock range, but close to the penny stock range. And there's some out there, right? We'll talk about that a little later on. All right. Also, I encourage everyone, review the video on Black Swan events, right? Now, the COVID-19 thing was just building at that particular point. It was still basically an Asian phenomenon at that point. But I just had a fear that, some Black Swan event could happen. Now, I did not mention the word pandemic or epidemic or anything like that in that vid, but I mentioned some other possibilities that could happen. But the advice in that particular vid is quite cogent to this moment. Please review that video, right? Now, what about the vid on peer-to-peer lending? Now, that's actually a critical vid. Now, earlier this week, I made a vid about how I expected to see a spike in delinquencies in the peer-to-peer lending platform, Lending Club, that I used. And sure enough, I have begun to notice some of the loans now going into grace period, right? Which is the first step towards full delinquency. Now, it's not a rush so far. Only 2 loans out of 225 or so have moved into the grace period category as of this week. But I fully expect that to rise dramatically over the next couple of months. Now, I've actually been trying to draw down on that Lending Club account, but here's a lesson for anyone interested in investing in peer-to-peer lending, right? Your money is locked up in these loans for the term of the loans. Most of my loans are 3 years, 36 months. Some are 60 months. But in any event, I'm stuck, right? I can only draw down the amount of funds that people have repaid back, right? And I have been doing that really the last month or so, since I really can't invest in new loans anyway, because in Texas we're blocked from doing that. But I've been drawing down the cash reserves in that account. I wish I could draw it all down right at this point, because I get the feeling that there's going to be a massive rush to delinquencies in the next few months. But I'm stuck. Where will this thing end? I'm not sure. But review the peer-to-peer video. Peer-to-peer lending video. It'll give you a good idea of where I stand right now and where you might stand if you elect to invest in peer-to-peer lending, right? Okay, so now let's talk about going forward. What can we expect? Well, to be honest with you, I do not know, right? I don't know. But one thing I have been doing is really scouring the list of strong blue chip companies out there that have had their shares beaten down, but they have endured crises in the past, right? And they are dividend payers, and they have a bright future once this thing ends, right? So I have been dabbling, right? Not wolfing down the full buffet, but dabbling in some purchases over the last couple of weeks. And even this particular week, I've done that, right? Now, I'm encouraging everyone who hears this video or sees this video, they're looking at a market that's down anywhere from 22 to 35%, depending upon which kind of stocks you own. And they're tempted to grow and rush and buy a lot of things, right? Let me caution you, please slow down, right? Yes, you may want to dabble, and acquire some beaten down shares. That's wise. No problem with that. Do not go and rush and drop all of your available cash at this moment. We do not know how long this sell-off slash bear market slash crisis is going to last. In the great financial crisis of 2008, many people thought that the market bottomed out in September or early October of 2008, and that was a false bottom, right? So many people rushed in, bought a lot of stock then, and it actually was not until early March of 2009 that the market finally bottomed out. And those people who purchased at the moment of the false bottom took a wallop before the market finally turned around, right? So what one might want to do, and certainly what I'm doing, is I'm purchasing some selective shares, high quality, right? Very high quality. And I'm purchasing them in dabbles, right? Still have a fairly significant cash hoard, and we'll wait to see how this thing all turns out, going forward. It may be months, and this market may go down only God knows how much before it's over, right? So there's no need to rush in now and come in full, guns blazing with all your capital and invest because the market shares have gotten beaten down so far in the last 2.5 weeks, right? Keep that thought in mind. Also, there is this. In reviewing my portfolio from this past week, what I have noticed is there have been days of massive market sell-off. That's this past Monday, also this past Wednesday, and this past Thursday, right? Now, on those days of massive sell-off, the entire market gets walloped. But then there have been days of massive rebound this past Tuesday and again yesterday, Friday the 13th, right? Now, on the days of rebound, what I have noticed is that it is the highly liquid, the proven, stable, blue chip companies that rebound the most. It is the smaller, more speculative shares, companies with high debt levels or low margin businesses that have either not rebounded at all or have only rebounded modestly. The market is telling us that some of these businesses, some of these companies will not survive this. That's what they're telling us, right? So be cautious, seek quality, right? That's in the equities portfolio portion of your portfolio. That would also be in the fixed income or bond portion of your portfolio. Please select only quality assets, right? Also, dividend paying assets. That's my opinion. That's certainly what I'm doing, right? It's been painful, right? And there is more pain to go. I don't think even after the September 11th attacks, I don't recall a time ever when so many businesses that are integral to life in the United States of America have been shut down, right? Gyms, restaurants, sporting venues, things like that. None of that happened after the September 11th attacks. I mean, yes, they did shut down the airlines. Yes, that did affect the hotels and other places. But this massive stretch of shutting down huge portions of life in the United States of America, this is unprecedented. How long will this last? I certainly just don't know. Let's be cautious and careful out there. All right. I'll keep you up to date on, as things develop on the Invest Strong network of what I'm doing, and perhaps you can benefit from it going forward. But I do believe firmly we will get through this. All right. Thank you much.